Click the bell icon to get latest videos from Ekeeda.
Hello friends, debenture is a debt. It is a loan taken by company from debenture holders. On this amount, company is required to pay interest, which we call as a debenture interest. This debenture interest is income for the debenture holder, on which company is required to deduct tax, which is called as tax deducted at source. This amount of tax deducted by company will be directly deposited to government treasury. Debenture holders will get credit for this tax deposited by company to government. In this question, we'll be discussing this concept. Anand Limited issued 2000 10% debentures of rupees 100 each on 1st April 2009 at a discount of 10%, redeemable at a premium of 10%. Give journal entries relating to issue of debenture and the debenture interest for a period ending March 31st, 2010, assuming that the interest was paid half yearly, that is 6 monthly basis, on September 30th and March 31st, and tax deducted at source is 10%. First, we will be recording entry for issue of debentures. Anand Limited issued 2000 10% debentures of rupees 100 each on 1st April 2009 at a discount of 10%. So that will be 10 rupees on this 100 rupees, and redeemable at a premium of 10%, that is 10 rupees on this 100 rupees. That means amount repayable is 110. Let us record first this journal entry. Bank account debit on 2000 debenture, per debenture 90 rupees received, 1,80,000. Discount on debenture account debit on 2000 debenture 10 rupees, that is 20,000. Loss on issue of debenture account debit 20,000. To 10% debenture account 2 lakhs. to premium on redemption of debenture account 20,000, being 2,000 10% debentures of rupees 100 each issued at 10% discount and repayable at 10% premium. Here we have recorded entry for issue of debentures. As per information given in the question, we are required to think of entry for payment of debenture interest. $2,000 debentures of rupees 100 each. So total amount is 2 lakhs. 10% of this 2 lakh. So debenture interest is 20,000. On this 20,000, we are required to consider TDS, tax deducted at source, 10%. So it comes to rupees 2,000. This is for full year. If it is half yearly basis, it will be reduced to half. That means debenture interest for 6 months, it is rupees 10,000, and TDS 10% of 10,000, it is rupees 1,000. Debenture interest for 6 months account debit 10,000, to debenture holders account 9,000, to tax deducted at source on debenture interest account 1,000, being debenture interest payable half yearly basis after adjusting TDS. Debenture holders account debit 9,000, TDS on debenture interest account debit 1,000, to bank account 10,000, being debenture interest and TDS paid. 2010 March 31st at year end. Again, half yearly interest becomes due. Debenture interest account debit 10,000 to debenture holders 9,000 to TDS on debenture interest 1,000. This amount will be paid to debenture holders. That will be our next entry. Debenture holders account debit 9,000. TDS on debenture interest debit 1,000 to bank 10,000. Being debenture interest and TDS paid. At the end of the year, company will be preparing its final account. Now, debenture interest paid by company throughout the year now will be transferred to profit and loss account. That will be our next entry. March 31st, profit and loss account debit 20,000. That is the whole year interest to debenture interest account 20,000. Being debenture interest of entire year transferred to profit and loss account. Here we have completed all entries relating to debenture interest and TDS. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.